move this discussion forward because, glitch or no glitch, tomorrow the markets will be dealing with the prospect of European contagion. And the question is, can that contagion be contained? David Rosenberg is a chief economist and strategist at Gluskin Sheff. He's been on this issue for quite some time. And David, what strikes me is a little blurb in a note of yours from a few weeks ago saying that Europe is about 3 times as important as the BRIC countries to U.S. companies. Can I read between the lines and say, you know, you believe that the U.S. companies are going to see some sort of a headwind out of Europe?
Well, I think that there's a few headwinds. Obviously, the European economy is going to be slowing down if it ever really got out of recession to begin with, and the question is by how much. And you're talking about a part of the world that's almost as big a share of global GDP as the U.S. is itself. And on top of that, nobody mentioned that we just had another salvo out of the People's Bank of China as they try and wrestle with this perceived property bubble. And I sort of noticed that, you know, the Shanghai index is down more than 20% from the nearby high. What's that telling people about the contours of this global V-shaped recovery? That could well be yesterday's story. And on top of that, we've got the stronger dollar. You know, for so long, everybody was embracing the weak dollar as a source of profit growth from currency translation. And for the large caps, that's now going to be a tourniquet. And what we're going to find on top of all that is that risk premium in general are going to be going up. And you mentioned about the contagion risk, and all you have to do, I mean, all the talk is about Greece. Well, take a look at what the Portugal and Spanish bond markets did today, and you'll
Gary's
see
got a question.
Hey, David, I've been in that camp for the last several months, and I shorted Europe in January and February, and under the idea that this was not a Greece problem, it was a Europe problem, and had my face ripped off. I believe that you cannot decouple. There are a number of people that have come on this show and say Europe can collapse and it won't affect the recovery in the U.S. What do you say on that point?
Well, I think that we learned, you know, not just from the last cycle in 2007, 2008, but we even saw it in the a decade ago. You know, we saw it in the 97, 98 Asian crisis. Tell me that didn't come back and bite us in the tush. I remember Alan Greenspan saying in a testimony to Congress in, July of 97, saying, how long can the U.S. really be an oasis of prosperity as a third of the global economy called Asia is going bankrupt? The next thing you know, we have a monstrosity of a correction in equities and a freeze-up in the credit market that caused the Fed ultimately to ease policy rather dramatically. So this whole notion in an interconnected world that we can decouple is the oxymoron of oxymorons.
All right, David, thanks for your straight-talking language. We appreciate your time. David Rosenberg of Gluskin Sheff, and he is highlighting essentially a lot of things that we've been talking about on this desk for quite some time as the Euro continues to weaken.
He says nobody's been talking about it. Frankly, we all have collectively been
every
talking
single
about it. So
day.
maybe he's watching other shows, but again, it's not just China. It's the Australian resource tax. It's the volcano that we mentioned and why we thought oil would go down.
Back to the ash.
We haven't even rehashed all these European companies that are going to blame the volcano when they miss 2Q earnings. I mean, that's sort of been pushed to the side.
If you blame rain, you're going to blame ash.
You know that's going to happen.
All right, got to take a break here. More Fast Money coming up next.